Current live stream. I don't know why my eyes aren't working very good today. So, okay, let me turn on Do Not Disturb. And I gotta hit the good morning. All chat, live chat. I couldn't include my notes in this one. Morning, Joe. For some reason, when I copy and pasted my notes, OBS kept giving me a mofo, what you doing? Got my AirPods. I was doing some podcast listening. Joe, you back on the West Coast, away from Florida? Just full disclosure while everybody joins, I just bought TQQQ again. $2 cost average my way down under 40. I think I bought it at 370 on the way up. See, it's got some confirmation here. Was going for a run, kind of pulled back. The VWAP right now is at 39.65. So, morning, Chris. I tried to buy at the VWAP, but it was on a run, so I didn't. Now, with that said, it does look like the core portfolio. Boyle's on a run if you haven't seen it. Boyle in the pre-market is way up. I think almost 10%. Shit's just flat. I'll go over the notes. Morning, Nevin. Joe, wah. I'll give you the Artie Lang. Wah. I never found the humidity to be a... Listen, I when I lived in Florida, the humidity was not an issue. Now that I don't live in Florida, the humidity gets to me. I used to go out and run. I used to... Actually, let me see. Where's my volume on these headphones? I probably need to... I think there's a volume button here. Let me put this down a little bit. There we go. Okay. Now I'm not echoing so much. I love this USB mic, man. This Blue Yeti. What a great mic. I probably need to... the podcast sounds okay. I'm not going to F with it. I'm going to move that up. I'm going to move this down a little bit, just a hair. I'm going to move my notes over here. Screen real estate is crappy here. I should take a picture of my setup, my screen right now, so you guys can see it. It's a nightmare. That is, oh, that's Chrome. Why the hell do I have Chrome open? Oh, because that Business Insider damn thing. Okay, we've got Active Trader Pro. I need to move this over here a little bit so I can see it. Nevin, I have people in my life now calling me G Money. I got a lot to go over. Just gonna go over. I'm not even gonna sort it out. Let me see. Hold on. I was emailing with a listener prior to this, so I want to make sure. Raul, if you're here, welcome. If anybody didn't get, by the way, Where's my this? If you are subscribed to TrendSpider, you should be subscribed to their social channels. This is an earnings run-up of Netflix. And strategy's good. I mean, it's really good. Where is it? There it is. It's right here. This is the strategy. So it does not belong to me. You can see that note. Hopefully you can see it, but I'm able to make changes to it. Now, here's the thing. It's done really well. And we're not going to do, I'm going to do not 10 years. I'm going to do a shallow. Move this down to about 1,000. So over 4 years, it's daily candles. So over 4 years, it gets you 38% versus 15%. And the strategy is earnings report date within 15 days. Earnings report date within 1 day, and you sell after the day. You exit 1 day afterwards. So earnings report date within next X days. So yeah, you buy. It gets you in before the earnings date and gets you out 1 day after the earnings date. I mean, it's pretty simple. Simple strategy. Over 4 years, 38% versus 15%. Listen, I'm going to be buying Netflix today. Today's my day to buy Netflix. I got to write a note in. Let me see. What's Netflix in pre-market? I'd like to get it under 400, but God, it's just not doing anything pre-market. It's all over the place. Here, I want to show you kind of for paid newsletter subscribers. I got really positive feedback on that. I took a lot of time on that one. It was the psychology of trading. I provided a trade journal that Bard did, and steps on how you can create it. I provided an analysis of the Great Eight. And this is what I want. Part of what the newsletter was about is, hey, I do this every weekend with the stocks in my portfolio. And that's why, if I have more than like 25 stocks, I'm spending all fucking day analyzing those damn stocks. That's why I like to keep my portfolio small, is because analyzing them sucks. But one thing, I say, hey, I want to buy Netflix today. Look at that into close. And right now you're at about 438.50, it looks like, between the bid and the ask. Getting a limit order through in the pre-market might be tough just because there's only 17,000 shares traded. So Netflix isn't one that's big pre-market. But look at that fall. And it doesn't give me confidence that this has any confirmation whatsoever. So when I'm talking about, hey, what do I buy? Here, I'll show you. The difference is if I go to TQQQ, and we just look at the pre-market in TQQQ, which is heavy in the pre-market. Look, when I bought it, I had confirmation. Now it's lost that, but I was dollar cost averaging down to a under 40. I bought at $40.50 on Friday, I think, somewhere in that neighborhood. I bought $39.70 today. So that is I'm trying to play this one on a monthly basis, on a swing. I broke all my own rules. I held it over the weekend. I should have absolutely 100%, by the way. This should have been a day trade, and that was part of the newsletter as well. I absolutely should have gotten out at 41.20. And then I could have gotten back in. So, I identified it as a long-term trade. It turned out that way. So I have to live with it. But I just dollar cost averaged and I bought more. I really like Webull put these damn graphics. I'm going to include them in the newsletter, but I love Webull's Monday. Here's the market data. Here's the large caps that are reporting, what day they're reporting. I usually go to Earnings Whisper, but I don't have to go there anymore. I can just go to my Webull account. And the Webull, if you want to open up a Webull, I'm telling you, here, let me get to, I have to go to my link tree. linktr.ee/daily stock pick. And I am going to copy link and paste it here. Webull, man, you can't beat it. You get, what, 20 free stocks? Go to site. To do 12 free shares. I mean, anywhere from $3 to $3,000. So I put money in there. I am going to close this because I'm going to go to TrendSpider over here. We're going to go to the 4-hour. Yeah, Netflix is a buy here at 438. 437 is where it's trading right now. Let's go Safari. I think you're right, Joe. I mean, here's the thing. If we go to DAL, I can't imagine that Delta goes down. But it's been a $40 stock. Here, let's look at a weekly. Look, it's been pretty much topping out at 52. I mean, this is the first time it's gotten over the 200-day since March. So the 50 days turning positive. The 9 and we'll zoom in on this a little bit. 50 days positive. 9 and 21 are positive. The 200 still negative. But you have all the confidence. God, if you got into this at 38, I mean, it's a solid play. So, okay, let's go to Market Scanner. And I've got to do this. I'm going to do a new scanner that actually does everything with one click. So then I have to sit here and scan a bunch. I don't think we're going to get much of anything. Energy names. Energy's got to turn around. Let's see, scans. Arch. COP is a good one. ConocoPhillips. I think that goes to like 110 in a good, I mean, that's a nice 7% run in a positive energy market. Energy names, levered ETFs, SMDD. Low cost Vanguard. Nothing in there. Spider sectors. Boy, this is going to be a quick one. Dow. Nothing in the Dow. Let's go to NASDAQ. 100. Illuminati. ILMN. Let's see. How's this one trade? Because I think, yeah, it was beaten down. Boy, look at that MACD. This one's juicy. Still not over the 9-day, though. Don't trust it. You got some gaps up here. ILMN. They're losing money. I mean, it's a... I think this is radiology or something. Large scale analysis of genetic variation. Okay, so it's a big one that Kathy Woods had a huge stake in and then got out of. Bunch of sales at 200, trading at 183. I mean, ever since this, which was November last year, you've been down. Here, if we even go to this one on a weekly. I mean, look, it's been a falling knife, but have you found some support down here at about 180? Let's go to S&P 100. And I'm not scanning energy because energy is just a BK. This is one we said down here was probably a good play. Yeah, 41, 3% gain, 44, you got your 10%. This is just one. I mean, I don't think the Bank of New York's going anywhere. Schwab we have. Okay, I'm going to start the podcast here in a little bit. Let's just look at SPY. It's got that little button hook. We got this volume shelf right at the VWAP. Well, the VWAP's underneath here at 42,428. But if I move that back, I hate moving it back a little, but yeah, it's even lower, 423. Kind of putting in that volume shelf up there. Let's look at a weekly. You kind of still have, I mean, you've broken out and you still got confirmation. Last week it was a red week. It was open at 442, closed at 438. Still like it. Let's see. Wow, TQQQ just lost its mojo. I don't think I can trade my parents' account. Here, I'm going to move you over to Active Trader Pro. Let me see, Fidelity. Log out. Then we're going to try logging back in. Log in. Bum, 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 bum. I don't think I can trade in after hours in my parents' account. That's what I'm trying to figure out. TQQQ. I can. Okay, let's see. Limit. Oh. Let's do. No, let's do 30. We're going to do 39.50. I'm going to do 39.50. Okay. Welcome. Earnings. There we go. We're going to get out of there. And I've got my SPY back up. Okay. I traded TQQQ again in my parents' IRA. They gave me, let me see, I'll tell you guys. They gave me $50K to start off the year with. And I am today at 54. So I'm not beating the NASDAQ, the S&P. Let's see, traditional. Let's see. Oh, I shouldn't have shown you that. Oh well. Whoops. They'll kill me if they see that one. Let's hope they're not looking. Okay, bum. I want to see if it gets down to the price that I may not get down there. Okay. Hit the thumbs up button, by the way. I forgot to do it on mine. I want to add. You know what I'm going to do? I'm going to duplicate. Big head. Going to do a big head. Because I have big head on my other computer, but I don't have a big head here. Okay. And then we're going to go Active Trader Pro, duplicate, big head. Then we're going to up this one. There we go. Hold on, Michael. I'll look for you. Mullen. Let's go back here. Safari Big Head. Here's my take on Mullen. I think their CEO is a shyster. I don't believe in them long term, and I'll show you why. Go over to FinViz. And I think I got big head on, so you might not be able to see some of this stuff. But here's my take on Mullen. It's not making money. It's an over-the-counter stock. Earnings per share, they're losing $39.12 per share. They've delivered, 11 vehicles. It's down 97%. The short interest is 4.29%. I don't think it's huge. But I mean, the CEO sold $5 million worth of shares at 32 cents in February. What makes me think that he's selling that amount of shares and has actual confidence that this is going to be a good thing? The only reason it popped was because they announced a focus into the short sellers. So, and I don't know what. Let's see, Wallbox. These are home chargers. Yeah, it's for your business. These are slow chargers. These aren't big chargers. They are equivalent to putting a NEMA 1450 in your house. 1460, whatever. I think it's 1450. It's just a plug. So let's see. Let's see what they're charging. Products. Shop. Store. What is it? Yeah, $600. It's not better than Tesla. I think versus Tesla. Let's go to Tesla. I think theirs is like $500. Shop. Wall connector. Theirs is $475. Nah. You're reading somebody's trying to get an affiliate symbol done. But Michael, as far as Mullen goes, I think you can trade it because I do think the volatility allows you to trade, but I don't think that it's a good enough it's at 18 cents. I said, hey, when we saw that run up on Thursday, that where it went to like 32 cents. I think their CEO is kind of like Aaron of AMC. He's a carnival barker, and he's going to blow and make big waves against people and blah, blah, blah. I don't know. I just don't believe it in long term. That's my take on it. Do I have Savvy Trader up? I do. Okay. My dog is barking like mofo. Let me see if I see anything on the home screen. Oh, we should check out Boyle. Hold on. Let's go to Active Trader Pro and go over to Boyle. Boyle closed at $58. It's trading at $64. Look at that move. I mean, that's this morning. So the weekend. Poof. Ed, here's the thing. Home chargers is not a big business. I don't think it's an enormous business. My take on it is home chargers, maybe. There it is. Volume. There we go. Home chargers maybe make up, God, I would guess 20% of the EV buyers buy home chargers. Might actually be less, might be more. Morning, Scott. But I can't imagine that it's a big ticket item. And the reason I say that is I don't have a home charger. I have a NEMA 1450. It's a dryer plug, essentially. And my mobile charger from the Tesla that comes with the car, I think you have to buy the plug-in now, the extra plug. But it's, you know, hold on. I'm going to move you back over to Active Trader Pro. Activity and orders. Replace. Let's do this at 70. Okay. And I'm going to get out of here. I'm going to move over here. Bump, bum, bump, bum. Could be a big move. Does Wallbacks, let me see. I mean, it's been a good stock for what, 5 days? I was looking from a product perspective, but here. Do you want to hold on to this one? From what? IPO'd. Open at $9 on the IPO day. Closed at $22.50. Never seemed to get up that high. Came up to $15.80 here. Let's see, WBX. Probably not a bad trade. I mean, anything in the EV space is a good trade. They are losing $68 million. They have cash on hand of 59 cents. They have 164 million shares, which means they have 80 million in the bank, which means they're solvent for maybe another year. And then they're going to have to dilute. So let's see. The average target price is $7.85. 2022 was the last time anybody looked at it. You don't have any insider transactions, but year to date, you're up 13%. Performance over 1 year, you're down 55%. So short term, looks like it's been a good trade. Long term, still kind of risking it. I mean, it's only a $688 million market cap, so it's not a huge company. But if Target's buying their chargers, they get a big thing. Oh, BlackRock. Let's see. What is BlackRock's symbol? That should be a good indication as to Brian. I am not probably a guy to tell you a good price to get into, but what's BlackRock's symbol? I don't even see. Is it BCX? I don't think so. Tell me the symbol. I'll look it up. But that's a good indication. I have no effing clue. Is it BK? No, that's... BLK? That's probably it. I know what they do. Yep, that's it. BLK. See, I found it on my own. Let's see. They raised their price to $8.35. They're trading at $6.84. Average $7.60. Down 3% year to date. Algorithm doesn't have you in. So I would say, you're over the 200-day. Wait for it to get under the 200-day. I think anything under the 200-day, this is one they're gonna make money. I mean, shit, if they get that Bitcoin ETF approved, these guys are back at $920. They're gonna have some issues with the commercial real estate. So listen, the reality of it is look at how many times in history of BlackRock you've been close to the 200-day. It's been during crisis that it dips under the 200-day on the weekly. There's 2022, the bear market, where you were at 540 something. So, I mean, depends on your time frame, Brian. Long term, it hasn't been around the 200-day other than COVID. If I'm doing a trend line on this from COVID, let's see. We're going to pass through 3 points. And then we'll pass through 3 points on the high side from pre-COVID. Or, you know what? Here's even better. That's my trend line. So you're kind of at the bottom of that trend line. So I don't think that it's horrible. Here's the beauty of TrendSpider. It's just 2 trend lines. I mean, there's your trend lines. So the top one is obviously the bull. The bottom ones are, I don't even know. There's different types, original, blah, blah, blah. You can do enhanced. You can do a bunch. But even the auto fib. I mean, if we do the auto fib, I forget how to bring it down. Auto fib doesn't work great on the long time frame. But if you run the 4 hour, you're out. I don't think you'll go wrong with BlackRock. I think Larry Fink actually does a pretty good job of managing that. And you got your earnings coming up, what, Thursday? I think they'll make mention of Bitcoin. I think they'll make mention of, some of the stuff that's hitting the banking sector. I think they'll hit some pretty high level stuff. Okay, I'm going to start doing the podcast now. Let's see. Boom, 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 boom. Yeah. Okay, let's get back to SPY. I like to start off on SPY. Why is DRN a buy? Let's look at DRN. This is a triple levered ETF. So I don't know that it's necessarily a buy right now. It was a buy down here at 905. Let's look at DRV. DRV is not a buy either. I mean, again, this is my algorithm. If you want the 65-minute algorithm, we look at that one. This one just uses the 8-day EMA. It's a buy now. Not a great track record of DRV on the 65-minute over 8 months, but I don't know that it's a buy. I mean, it looks like it's been beaten down. This is the real estate three times bear. You know why it's a buy? Because real estate freaking sucks right now. Real estate, we have a housing crisis. In real estate, the prices haven't come down, but the interest rates are going up. If the Fed starts, raising interest rates higher for longer, these prices have to start coming down because it's a bit ridiculous right now if you're looking for a house. T-Drift, Google and Tesla, they are part of the grade 8. So T-Drift, I would tell you, go to my newsletter, pay for a free 7-day trial, and then read the grade 8. I put it in there. It's in my newsletter. Both those. I did a complete analysis of the grade 8. So, listen, I put a lot of time into that one. So, I will give my my view of Tesla and Google at a later date. The only reason is because I want the value to sink in with those the paid subscribers. They're again, I got a great note. Who is it from? Let me see. I made a note. Nick from Canada wrote a great note to me. He was so kind. And he said, as a carpenter, he's a carpenter. And he said, as a carpenter, his dad always told him, don't give away your work because, people, if they value you, they will pay for it. I kind of believe that. I also believe that nobody knows where stocks are going to go. But the analysis that I kind of do and the price points that I kind of do, if somebody's willing to pay me for it, I'll give them preference over the people that, kind of jump on here for free. And by the way, this T-Drift, this isn't like, hey, the only reason I'm not doing that today, normally I will. But the only reason I'm not doing that today is because I analyze it for here. So I want those guys to get at least 1 day of value per se. I'm going to turn this volume up a little bit so I can hear myself. So I don't start yelling. That's the biggest thing that I start doing. It is. So Brian, the newsletter, the podcast notes are free, but what I'm doing is more educational, paid for on the weekends. It's not much, $7 a month. It's a cup of coffee. But I am thinking, it's ironic. Can I change the price of my subscription after launch? And it says I can, so I might do that too. But the overall newsletter is for free. It's just, Brian, what happened was, and you're long enough to know this story. Come on. I was going to start putting that PDF book and updating it. And I was going to charge $20, $30, whatever. And essentially, I went into Substack and I accidentally turned on charge. And I didn't know that turning on charge, there were people who pledged. I didn't know that when you pledge, it means that you wind up charging it. When you turn on paid and people had clicked pledge, it wound up charging people. I went on, and after it charged people, I went on and said, hey, and I emailed folks. I said, if you want a refund, I absolutely will give you a refund. That was by mistake. Everybody said no. So my thought was I wanted to provide them something of value because they paid. So it wasn't my intention to turn it on for paid, but the newsletter is for free for the most part. 5 newsletters a week? On the 6 newsletters a week for free. But the one that's paid, this one, the grade 8 is paid. Let's see. Indicators I use and why I use them. That's paid. And there's another one. My setup in TrendSpider, a detailed look. And that's just part 1. I got more parts coming. But yeah, your boy's a dumbass. I mean, honestly, I'm just a dumbass, Brian. That's essentially what it is. But it's mostly free. But T-Drift, I never put people off like that. And I know I'm a douche for doing it, and I apologize. But when people are paying me, it just feels like, if I give a freebie. It's kind of like, think about it this way. Apple charges you 40% more than what they actually cost to make the iPhone. If they were to give you an iPhone, it wouldn't have the cachet, wouldn't have the value. So I want to provide value for people. So how about Yang? I like Ying. Let's see Yang. I don't think it's a bad play. Yang, the problem you're going to have is, let me see the volume real quick. Problem you're going to have with Yang is it's got decent volume. I mean, 3 million a day. It's got a 2.19% dividend. China is not doing great. And that's just from a guy who doesn't study China, but here's kind of the talk. So I'd be careful with it. Any levered ETF, I'd be careful with. Because, you know, the government can come out and say Jack Ma's been executed by someone. We're going to investigate it. And you full damn well know the Chinese government executed him. Yeah. So, but fear not, Brian, by the way, you will not be getting charged for the podcast, the daily newsletter, things of that sort. It's just more the weekend stuff. The stuff my ass puts a lot of work into. A lot of separate work into. Okay, I'm going to start the podcast now because it's long enough. And the market's going to open as I get into this. Good morning. It's Monday, July 10th, week of MLS All-Star Game. And those of you that listened for a long time know I do contract work for MLS. And I will be heading down to D.C. where the MLS All-Stars will be taking on Arsenal. I'm heading down there Wednesday. I've been told I don't start work until Friday afternoon. So I should be online and doing a podcast every day. Wednesday will be a very quick podcast. So if you're kind of tuning in and seeing some stuff, yeah, I'll be on pretty much all week. My weekly stock. I will be putting a link in the newsletter. If you guys don't subscribe to my newsletter, go over to dailystockpick.substack.com and subscribe. But I will be putting a link as well in my newsletter to Weekly Stock Pick newsletter. He asked me to do that. He's been growing. He's been doing great. And if you want to subscribe right now, it's just myweeklystock.substack.com. He's up 4% in 2023. His strategy is simply just to buy on Monday and sell on Friday. It's a simple strategy. And I'll go back here. You can see, look at how well it did. And the shocking part was, look at 2022. Now, remember, SPY was down something like, 15% in 2022. This dude was up 13%. Simple. He tracks his performance. You can read all about it. So myweeklysubstack.com. If you're not subscribed to it, I would say subscribe to it. My newsletter, unlike my newsletter, his is completely free, 100% for free. Sign up. Doesn't have a paid newsletter at all. He is fantastic. But my newsletter, I put out, and I've been getting really good response from the grade 8 and the psychology of being a trader. My personal opinion is that I like being an investor more. But as far as the psychology goes, I give you a great article that has 24-part lesson on becoming a day trader. And some of the things that they go over is the psychology. And but it's a paid newsletter. The other thing that I do is take my grade 8, which if you guys listen, if you're a subscriber to the newsletter, it will be in there. The grade 8 stocks that I think are just fantastic, that have moved the market this year. It's no shock, but it's the grade 8. I went over a detailed, including 4-hour algorithm, 65-minute algorithm, and weekly charts that are in there, and kind of where I think the grade 8 will. I'll go over kind of that later in the week, just because I want to give the paid subscribers some value. and I want to let them know, hey, I value you guys, and here's some exclusive stuff. I take a lot of time doing that. So if you want to become a subscriber, at the end of every free newsletter, there is a link to actually upgrade. And if you want to subscribe to anything of mine, Linktree, linktr.ee/daily stock pick. You can look up, the 25% off TrendSpider, which I use, Visible, Webull. And I've been telling people over the weekend, I really like Webull. Webull, you can get 12 free stocks if you just use that third link down there. But Linktree has all of my stuff. Now let's talk about the market. SPY. SPY, if we look at a weekly SPY, we're still in a bull market. And I know it doesn't feel like that because, we talk about the market every day here. But we are still in a bull market. You still have confirmation over that 9-day. You're still not up near the 480 on SPY, where this is. But I still like it. I like this 50-day to bounce off that 200-day, and we continue in the uptrend for the long term. If we're looking at the 4-hour algorithm on SPY, you're still in it. Yeah, the 9-day has kind of turned a little bit downward. You're well above the 200-day, so it would be due for a little downturn, but I still think the markets are huge. By the way, I will include my weekly stock pick has included he's doing 3 new algorithms that he's testing out, and there's 3 stocks that he does. And again, these go through the same kind of process. Buy on Monday, sell on Friday. So I'll include that in the newsletter. But back to SPY. Tom Lee, who's been right way more than he's been wrong. He was bullish all last year, got his kind of head handed to him, but he has been 100% right this year. He thinks the S&P rallies over 100 points this week with the CPI data coming out on Wednesday. He believes that the S&P, which means SPY, will wind up at 4,850, which would equate to $485 on SPY. You're trading at 438. So he believes that's where we end the year. What did I do in response to Tom Lee this morning is I bought QQQ. TQQQ. I think the QQQ is going to explode again when we see that remember, there's seven stocks that have been driving this market, 8 stocks, the great 8. And in my mind, I think we continue on that run. The 8 stocks that go up have to be the ones that move in order to move the markets either down or up. I think they continue up. Not all 8, but I do think they continue up. And overall, TQQQ in my mind at 30, right now it's trading at 39.72. I bought at 39.70 this morning. I have another lot in there at 39.70 if it gets down there again before it opens up here in 4 minutes. I like it over 40. So I bought some on Friday, 1 lot. I bought another lot this morning, and I'll buy a 3rd lot this morning. And I think if Tom Lee is right, I'll probably wind up being really, really happy at the end of the day. Let's talk about Uber. I like Uber under 40, and I've been saying that for a while. It has not gone under 40 since I said that. This is 39.80, June 2nd. I said buy it under 40. So when it was down here at 37, I said buy it under 40. It is at 42. I think you're looking at a $50 stock by the end of the year, and I think that's if they become profitable. Let's see when their earnings actually are. Their earnings are later, so it's not coming up any point in time soon. They are losing money, but what was shocking to me was the Kashikari sold stocks, and it's not on FinViz yet, but I saw a report that he sold stocks for the first time in 2 years. That's not good news. And so I would tell you, wait for this one to get under 40. Here in pre-market, it's at 42.80. It closed at 42.92. Got you out with a 5% gain. I would have said, hey, get out at 46 if you got in here at 39, because that is close to a 15% gain. The MACD is on its way down. The RSI is in no man's land at 50. I think you can get this under 40. I think this volume shelf that is right here at about 39.02, I think that's a good volume shelf to deal with. I think you'll come back down there. Just be aware that this one could move big on some news. Another one that I noticed this morning as I was scrolling through some of my own is Schwab. I've said, hey, Schwab was a buy under 50. It's a $60 stock at some point in time this year. You're at $57.70 at the basically. I don't even think, I think their earnings are coming out July 17th, it looks like. In my mind, I think this one's great. I do think this is a great stock. Under 50, it was a great stock. Here at 57, I'm a little less bullish. But if you want $3 in a stock and you want a 5-6% gain and you want something that's solid, Schwab is your stock. I mean, if you look at this one, it was a $75 stock here before all of the banking crisis. $2 billion is what their bank is actually worth. Now, the overall company is worth $102 billion. $2 billion will not take down an entire company. So I still think it's a buy right here. Honest to God, I think, at some point in time, I may buy it. I'm going to announce which one I'm going to buy at the end of the day here, but I am going to buy another stock today. Just a shout out. Nick from Canada wrote me the kindest. I can't respond when you guys subscribe to the newsletter. If you go down to the bottom of one of these newsletters, there's always a subscribe button or paid button. Nick from Canada wrote me the kindest note about, hey, I'm willing to pay for it and you do great work. And I thank everybody for their nice notes. You guys are awesome. I got a bunch of other messages. I can't respond to those messages, unfortunately, when you sign up, other than being a creepy dude who goes into your DMs and emails you directly, which I'm not going to do because, I don't know, I feel creepy about it. But again, thank you so much. You guys are really, really nice about it. But let's talk about Webull, because I said on this one, Webull is the third link down here. You can get 12 free stocks if you use that link. Now, what I like doing is on Monday, Webull puts out, and I'll put screen captures of what I see in Webull. I put $1,000 into Webull. I think I'm at like almost $1,200, so I'm up, 20%, which isn't horrible. Pretty good. I don't have anything fantastic in there. I think I could have done better. But I've been managing the portfolio fairly well. Let me see. I don't think I'm at 1,200. Let me see. I'm gonna look real quick. 1135. So I was at 1,200, but I lost $70, I think, over the past week. I do think that remember, it's $1,000, so I am tied to that PDT rule of under $25,000. So it's not like I'm day trading in there. It's nothing exciting, but they give this great Monday view. And part of it is, and I'll put it in the newsletter, is the earnings calendar. I don't have to go to Earnings Whisper anymore to see it. We have American Express coming out. We have Procter & Gamble. We have Delta Airlines, Wells Fargo, BlackRock, Citigroup. BlackRock is coming up on Friday. Wells Fargo on Friday, Citigroup on Friday. That's pre-bell. Procter & Gamble, Cintas, and Delta are pre-bell on Thursday. You've got Morgan Stanley on Wednesday morning. American Express is one on Tuesday. Amex has been an interesting one because I'm not an Amex customer. Or I'm sorry, AMX. Oh, that's American Mobile. God, why was I thinking Amex? But this one's Thursday. Why am I thinking this one? Ignore my rant. Your boy can't see in the morning. But the other thing that Webull put out this morning was major economic news and core inflation rate year over year, July 12th. Core inflation rate month over month, July 12th. It's all the July 12th. It's the expectations of inflation. And then on July 13th, you get the PPI, which is the producer inflation. And then on July 14th, you get the Michigan consumer sentiment. So I think overall, it's a great, great app. I like waking up on Monday morning and looking at it. So if you want to put some money in, go over to Linktree. It's linked down below. That third one is Webull. Put $1,000 into there. I like it. I mean, I really do like Webull. Again, find yourself a good brokerage that you like. It's worth its weight in gold. I'm going to move over to Boyle because your boy Boyle, Boyle has made a big move in pre-market. It opened at 62. I think it closed. Let's see. I'm going to go over to Active Trader Pro and look real quick because the market is open right now. Oh, and by the way, TQQQ is over 40. But BOIL looks like it closed. It opened at 61.89. It closed at 58.95. It's at $62. So BOIL is making a move. This got you out with a 14% gain, a 14% gain, even after that reverse split of 20-1. 14% gain. This is going to get you right back in. Do you buy here at 62? I don't think you're doing yourself any disfavor by buying at 62. Natural gas is super, super low. So I think BOIL, as we head into summer here, as you head into more Ukrainian fighting, as you head into Russia ain't pulling out of Ukraine, Russia ain't going to provide natural gas to Europe for next winter. Europe is going to have to use their resources and their storage ability. And they're going to have to buy more expensive. It's going to go up. Natural gas is just going to go up. If you don't want to buy BOIL, because BOIL is just a levered ETF on the price of the futures, buy a company. And that's LNG. LNG is for Cheniere Energy. And this one has a huge gap up here at 161 to 164. You're trading at 151. I say get this under 150. That's what that yellow line is. If you buy it under 150, you can sell it over 150. I think this one fluctuates a little bit. I think if you buy it under 150, I think you can wait until this winter where it goes up to 160. Remember, these guys pay somewhere in the neighborhood of $15 for natural gas to load it onto a ship and stuff. They're selling, last year they were selling it in Europe for close to 100, 150. So the same $15 block of natural gas, they're making that much profit. Huge, huge opportunity. Two things that I want to point out that TrendSpider launched, and you should absolutely 100% bookmark, and I will include them in the newsletter for you. The first one is TrendSpider's Learning Center. It's not just about TrendSpider. This is all about technical indicators, chart patterns, chart analysis, chart types, order types. Yes, it uses TrendSpider's actual charts to graph it. You don't have to be a TrendSpider subscriber to actually use this learning center. Between this and TrendSpider's YouTube channel, you can learn everything that you want about trading, everything about charting. You can take a look at this stuff, styles of trading, account types, trading terminology, trading concepts. It is a one-stop shop for absolutely everything. But if you do sign up for TrendSpider, the benefit that I give you is when you sign up through me, I give you my algorithms, I give you my watch lists, and I give you my scanners, everything that I use here. So I give it to you for free. I send you a welcome letter. Anybody that's signed up for TrendSpider understands, hey, it is unbelievable. And you get 25% off when you sign up through me as well. So it's, I think, $420. Just make sure that that is worth it for the amount that you're trading. The second thing that TrendSpider launched is this. This is their markets.trendspider.com. It is an unbelievable tool. And I'm finding it incredible. Like, for instance, if we go and look, let's look up, the one that I want to look up is Palantir, PLTR, because they love Palantir. They absolutely love Palantir. The CEO, Dan, loves it. I think he's been a long time like bitcher and complain about it. But look at this. Seasonality. You get this stuff for free. The seasonality of it. Options flow. Advanced data unlocked. But again, you get it's got a ton of the stuff that FinViz has, just in a significant, easier way to look at it. Graphical, which I like. And you can do open advanced charting. You can do advanced charting. Again, you don't have to be a TrendSpider subscriber to use that. So I'm going to bookmark both of them. I suggest you guys bookmark them. I'll include them in the newsletter. Joe on Facebook, for EV stocks, I'd like you to look at PSNY. Yes, not making money, but production is in full swing with over 50,000 delivered last year. Demand is good. Adopted the Tesla plug this month. Really nice cars, model lineup planned. A guy at work has one more plush than the Model 3. I do like Polestar. PSNY is the symbol. I've seen these cars. I like the cars. I think going into Tesla, what'll happen is they will integrate Tesla into the Tesla charging network into their cars over the next coming year. It's not immediate. They signed the deal, so it will happen. Here's what you have to know about Polestar. I do think Joe is right. It is significantly more plush than a Tesla. Teslas are plastic. Teslas are you buy a Tesla for the tech, not for the finish. These cars, I think they partnered with Volkswagen, if I'm not mistaken, and they've got their platform on Volkswagen. But it's super, super nice. And it drives nice. It's got the range that you want. So I do think Polestar it's not a bad long-term play. I would tell you, we'll go to FinViz and we'll look. Like Joe says, yes, it's not making money. You do have a volume shelf level here between 521, which is going to provide some resistance level. But there's a lot of people holding. Look at how many people are holding up here at 10. So PSNY, let's go over to FinViz and take a look. Polestar, they're losing $465 million. They have a market cap at $8.99 billion. Cash, they don't say how much cash they have on hand, which worries me a little bit. Are they going to have to dilute? Oh yeah, it's Volvo. Yeah, Joe just corrected me. It's Volvo, not Volkswagen. It was one of those V's. The average price target is $5.50. So you're trading at $4.49. You got some upside to that one. It does look like most of the $7 range. Yeah, February, April, and April. $7 is the most recent. So you do have some upside. No insider sales. So I think you're good. Joe, I mean, here's the thing. I think it's a good car. It just costs a lot of money to make these cars. And so I think while Tesla is making money, they're the only EV company. Well, I shouldn't say the only EV. They're the only ones making EVs that are actually making money other than Chinese companies. And Chinese companies, you got to kind of ask yourself, is it audited? Are they really making money? Like NIO. NIO was one that they were almost bankrupt. And it was way back. I'm going to look at a weekly on this one because this was way back when I was trading it. And I think it was like 2020. I think it was around here. Yeah, it was around COVID. They took a big leg down somewhere. It might have been this. And then the Chinese government just decided, you know what, we're going to give you $10 billion and you're going to continue. And then it just shot up. And so I'd be a little bit careful with Chinese companies, but I think PSNY, I think Polestar, I agree with you. I like the cars. And I'm rooting for them. Baba's up. Ant Group, the Ant Group was fined. The Ant Group announced a buyback, and Baba is up to $90.51. You got a buy-in here of 91.05 on the morning candle. I said, hey, buy it under 90 because I think you're getting back to 100. I think you're going to 102. It's just starting to cross it. I think Baba's a play. I like it here. Corey from Instagram was curious if you've heard of AGNC. It came up as a stock pick when I was using GPT-4 to choose some possible undervalued stock. What caught my eye is the 15% dividend and its 10-day average volume of 10.5 million. AGNC. Let's look at AGNC. This is an investment group. I think I wrote him back. Yeah, it's a little bit of a falling knife. Look at that MACD right there. Right now, I wouldn't be in this one because it really doesn't have any kind of confirmation over that 9-day. You're kind of just hovering around that 9-day. You've got a gap down. AGNC, let's take a look at some of the financials. Usually, there is a reason that they have a 15% dividend. It's a REIT. So the reason is that they just don't reinvest a lot of the stuff into them. The average target price is $10.42. It's trading at $9.75. Upgrade from JP Morgan to $12.50. I don't think it's a horrible one. I just think you have to be aware. This EVP bought $98,000 worth at $8.91. Everybody's selling at $9. I I think you have to be aware that REITs, the reason REITs pay the dividend is they just don't reinvest. And if there's a case where they have to reinvest, you're going to get one of two things. You're going to get diluted, or you're going to get a reduction in the dividend. Either one's bad for stockholders. So understand what's in the REIT. I don't know specifically what's in the REIT, but I don't know that it's undervalued from a long standpoint. Let's look at the weekly real quick. Because look, I mean, there's a reason it pays, a 15% dividend. And it looks like it's getting tough to hold on to that 15% dividend, to be honest. That's right there is around May 2021. You're at $18 and you're at $9 right now. I think it's undervalued for a reason. I just don't, I don't see again, MPW is one that Sherry has brought up. That is beaten down kind of the same thing. MPW is medical properties, and they're seeing some positive momentum because medical properties are actually paying their rents. So, Corey, I'd be careful. I'd probably look into, you're a sophisticated enough investor to look into exactly what that is. Let's see, Cecilia, why don't we look at TSL, Tesla or TSLQ? I'm not sure which. I did in this daily stock pick, the grade 8. I did a great analysis of Tesla. I'll look at Tesla overview. Their earnings are coming up. It's on July 19th. So next week, I'd be slightly concerned of this run going into this. I think that there's this gap down here at 235. I think there's a significant volume level support at 250, which you can see poking out right there. If I move this back, it's right here at about 257 or so. But from a long-term perspective, a good company with good earnings and good products should return back to highs. This is part of the paid group. Right there, you still got 50% to get back to your highs. You still got, let's see, if we go from today's stock price down here, you still have, 61% to get down to your lows. So you've got 50% up, 60% down from all-time highs. It's a bit in the middle. I would say 250 is probably your swing, Celia. But wait for I don't know that I'd trade this into earnings just because we don't know what's going to happen. Sit there for earnings. Wait till the stock comes out with earnings and then maybe trade around it. LM Shannon on Facebook put out this great LYSCF is the stock. LYSCF. Let me put that in. It's rare earth. This is a super, super small cap. So just be aware this is super, super small cap. I will put all of the research they did in the newsletter. If you're part of the Facebook group, you can read the post, even a link to an overview of TMRC, which is a good example of the overview of TMRC, which just fantastic research. Now, without looking at all the things that you posted, which means you know a lot more than I do about this stock, let's take a look at them because I don't want to be influenced by what you see. But I can't even find FinViz on it. LYSCF. Can't find FinViz. So I can't find anything about the actual company just from an overview perspective. But let's take a look at the stock and would I be in it. Right now, $4.91 is the buy. You're trading at $4.70. You just got out of a 14% gain on this one. The 4-hour algorithm makes you 7% over 2 years. Whereas if you just bought and held, it's 3% for the actual asset. The 65-minute algorithm, which will run on this one over an 8-month period makes you 20% versus losing 10% on the actual asset. So first off, clear to me, you're better off trading this than owning it, just because I don't think owning this one does you any necessarily good. I mean, if you're only making 3% over 2 years versus 7% in trading, I think that's a good sign. Now, $4.91 seems like a little bit expensive. Long term, it looks like you're trading just above the 200-day, kind of like you said, LM. I just don't think that this one's going to go under the 200-day. I mean, it hasn't other than COVID. And you said rare earth minerals are going to be around for a while. I think you're right. I just can't find enough about the fundamentals of the company that it would make me a little bit nervous about it. They barred investment in their company from being owned or bought by Chinese investors that could manipulate the rare earth global market. There will be 2 new facilities, both located in Texas. One in the Seadrift. The U.S. government awarded them $120 million to better secure the U.S. rare earth capabilities. Both facilities are expected to be operational in 2025. I can tell you it's not making money, but I think people are betting on it. I'd probably find a better bet. Honestly, I mean, it just looks like it's been pumped up. It's a small cap. I would find out more information, less about rare earths, more about the company's financial conditions, what they're going to do, how they're going to use that $120 million. That's what I would be more concerned about. TrendSpider put in, is Netflix about to run into earnings? History suggests it might. The strategy enters long 15 days prior to earning, exits the day they report. 1,300% return over the last decade with a 71% win rate. It took another entry on Thursday. Import the strategy. So if you have TrendSpider, I'm going to include this link, and you basically it's just like when I send you my links, you log in and import, and you just basically import it into your strategy. So here we go. We're going to go over here, and I'm going to look down here. Where is it? Strategies. Earnings run up by TrendSpider. There it is. And we're going to run on Netflix. And it runs there. Boom, boom, boom. 440. You're trading right at 440 right now. So if you're looking at this, it had you a 4.22%, 2%, 5%. Again, TrendSpider says if you just do this over 10 years, it's a 1,300% return. What's nice is that you just basically buy it and then sell it right after earnings. There's been a couple where you've lost, but if we look at the long-term history of this, for this year at least, I mean 22 and 23, looks like, ever since it's been in that downturn, you've been winning on that one. So I like it. QQQ. TrendSpider has some history with the 370 resistance level. This is a chart from TrendSpider, and that I'll include it again in the newsletter. But 370 looks like it's a crazy resistance level. 1, 2, 3. 2022 and this year in 2023. So where are we on the Qs right now? Let's take a look at QQQ, because your boy just bought triple Q, 364. Let me look at this, and we'll go to the 4-hour. QQQ is at 364. 370 is that resistance. Are we heading back there? It'd be a little bit of a stretch. But let me look at Active Trader Pro and look at TQQQ, just because I bought it this morning. Is it back under 40? It is back under 40, 39.40. So we took a big turn down. It looks like it opened. Oh, your boy didn't do too well. But 364, again, 370 is that resistance level that you saw. Sherry is a fan of Fubo, and she sent me this article, and it's 3 growth stocks with 55% to 71% upside. The first one is Fubo TV. Read about it. They talk about some of the costs of local sports. As a former cable executive, I can tell you that's a huge part. If you guys are old enough, most of you younger folks probably don't subscribe to cable TV. But if you do, remember, every year they raise your price. And you want to know why they raise your price? Because their prices go up. And they have to keep their margins. So 35, 40% margins is what they're looking at. So in order to do that, say ESPN, ESPN is the most expensive with their suite of ESPN services that Disney provides. And say it costs $15 for a cable company, and then they raise it to $15.50. Well, guess who's not getting a 50% raise, a 50-cent raise in their rates? You're getting a $1 raise. because they want to keep that margin up. So that is where Fubo TV might get into trouble. I think it's a good trading stock. I agree with Sherry absolutely 100% that it's a trade stock. 210 was the entry. You're trading at 226. Great trade so far. Fantastic trade. Just got you out of a 7% gain here, which you could have gotten it even higher. With that button hook right there, it came down under the 9-day. Sell when you're under the 9-day. You're still over the 9-day on this one. So I like it. Just realized 227. I don't know what the upside really is on this one, but costs are going to hurt this one. And so your earnings are coming up August 3rd. Sherry likes it going into earnings. Hey, if they announce some type of crazy number that they've gotten a new amount of subs and the subs are growing, I think you're looking at that one being a good one. If you look at over on FinViz, you can see they're losing $367 million. They have about $2 per share. They have $290 million. They're going to have to dilute at some point, I think. February downgrade from Evercore, $6 to $3. If you move from $2.27 to $3, it's a great move. That's from February. So I don't think it's out of the realm of possibilities. You look at some of the options exercises, nobody's really selling. The last sale was at 274. Again, if you buy at 220 and you get to 274, you're happy as pie. So I don't disagree with Sherry. I just think it's a trade, so be careful with that one. There was a Bitcoin call this morning where it was Standard Charter made a call that Bitcoin would reach 50,000 this year. You know who's going to benefit from something like that? Mara. Mara is trading at $15.40. You're getting this button hook. Charlie from Zip Trader went over Mara last night. That MACD is stretched. The RSI is in overbought territory at 65. It's going down. I wouldn't necessarily get into Mara right now. I still like $10 for Mara. I think Mara comes down to probably this realm at 12 at some point in time. You can look. I mean, just look. We'll pull it back here the last time it ran up. This was April, the last time it ran up. Look at your volume shelves. You're just not putting the volume in up here. The volume shelves are down here at around 10, at around 12. So I would wait for this one to pull back to 12, add a little bit at 12 in order to get your exposure in. This is, again, if you're not exposed. If you don't have any shares of Mara, I would get into this one because Bitcoin right now is at about 27,000. I think you have opportunity there if Standard Charter is right and it goes to 50,000 at some point in this year, which it absolutely could. So as far as scans go, let's talk about Arch. This is a coal company. I don't believe that this one's growing anymore, but coal's becoming less and less of a differentiator, meaning that there's just one company that provides it, and they're providing it to China mostly, and China's actually increasing their demand for coal. They're building more coal plants because they can't, renewable energy and stuff like that with the demand power that China requires. And coal is just their best bet. So Arch Resources, here's the danger of this one. Over a 2-year period, Arch Resources, the asset makes you 88%. Trading this one only makes you 0.8. So I'd be very careful of this one because it's been stretched. It is just stretched, and the only reason it's stretched is because, again, China's demand for coal has been huge. Another energy company that came up with a cross-up, COP, ConocoPhillips. This one I like going to at least 110. You're under the 200-day. The 200-day is right there. Energy just hasn't hasn't been any love for energy. I've talked about PXD. My choice is PXD, which is, PXD, 206. Get it under 200. It's at 206. I've been telling you this one. 204 was the buy-in on PXD, but ConocoPhillips had a cross-up. SMDD, this is one of our levered ETFs. It is the mid-cap 400. This is the short. So this is assuming, if we get the cross-up here, that the mid-caps are going to go down. Well, if inflation comes back and you see this, you're going to turn down. I bought TQQQ. I bought it just at $39.50. It's now at $39.20. So your boy's not making money on this one. I've doubled down, but I do think that we'll probably get above 40 at some point in time in the next month. I identified it as a long trade. Probably not great right now. Doesn't feel good, but I went over that in the paid newsletter about how I feel about long trades getting in. I'll have a stop loss on it, but 3 lots that were smaller. Total lot size will be 10. So I've got 30% of my 100% lot in there. But SMDD is the one. ILMN. This is one that Kathy Woods loved. And then she got out of years ago. Probably about 2 years ago she got out of. 183.34. This is a $200 stock in my mind. If you look it up on FinViz, they are not making money. The forward PE is a little bit expensive at 58. It's a genomics kind of company. She didn't like it. She knows better than I do. Could you trade this one? The average target price is 238. And it does have recent in January, 235, 216. You're trading at 184. So I think you do have some upside. You're on the below the 200 day. If you look at the weekly, it's well below the 200 day. Was this a run up to 500 that was unjustified? Probably. Do a little bit more research. I do have this in this is in the S&P 500. So I believe it's a well audited company. The other one that has been recently, we talked about this one at 40. It's now at 44 and it's got another cross up here. 44.48 is the buy-in here. Got another cross up. It's just kind of capitulating around that 200 day. If we look at the long, and this is BK, by the way, Bank of New York. This is one of your smaller regional banks. So it's one of these that's kind of, it's not in danger because I haven't heard that it's in danger, but it's a kind of regional bank thing. The earnings are coming up, I think this week, July 18th, so next week. And I think they could announce that there's something positive. Look at the stock. I mean, if you look at the stock, this was a $60 stock. Just recently in February before the crisis. I mean, look at how far it fell last year in the lows. And then it came out in February up to 51. So I do think you have some opportunity there. If you know anything about banks, BK is one. Okay, that's the podcast. Again, to go over some things. This is my link tree. This has all the links: Facebook, Twitter, Instagram, YouTube. I don't have TikTok. I don't know what that is. Oh, that's Spaces. And then you've got Spotify and you've got Apple Podcasts. If you want to tip me, there's a tip up there for Venmo. Or if you want to use Cash App or PayPal, they're all down below. The newsletter is right there. First sponsor is TrendSpider. If you click on this link, you get taken here to TrendSpider. And it will basically, if you go to plans and pricing, my 25% off that I give you, I think it comes out to $420 for the year right here. Let's see. $79 a month. It should be 20. Buy now, yeah. Skip the trial, buy for $468. $468 is what it is. So you can get 2 months free right now. Elite, I guess it's 2 months free if you pay for the yearly. If you go to monthly, it is $79 with a free 7-day trial. So $79 a month is what it is. But I think that's my 25% off. It should be my 25% off since I clicked on the link. What you do is you sign up, you send me an email with your email address that you signed up with. I will confirm that you're in my program. Then I basically email you all the links. And you have to be in my program to get all the updates. If you're not in my program, you won't get some of the updates when I do update like watch lists and scanners and things like that sort. So that is the first sponsor. The second sponsor is Visible. If you go here and you sign up for Visible, I just saw that Visible is kicking off people from their old plan. So if you haven't updated and you signed up through me, do that. Click on that link. You get $20 off your first month. It's basically $25 a month. I pay $25 a month, unlimited service on Verizon. It's not some off-brand like network. It is Verizon network. It's the best network out there. And I pay $25 a month. unlimited service, not deprioritized until you use 50 gigs of service. Nobody's using 50 gigs of service. Come on. If you're using 50 gigs of service, you're out of your mind. Third sponsor is Webull. Again, I went over it earlier. I love Webull. I've got $1,000 in there. I like their app. I really do. So there's your sponsors. I will talk to you guys tomorrow. Have fun. Good luck. Let's hope that TQQQ actually turns around for you, boy. It'll be interesting. I'm in it for the month. Okay, take care. Bye. Ah, Cecilia, you're here. Brandon. I don't know, man. I don't even know what Fidfolio is. I don't think there's a tax advantage. I mean, if it's rebalancing every month, you're basically having a tax. It's selling. So it's creating tax events if you're rebalancing. I think the advantage is that, say, you want NVIDIA to be, 5% or no more than 5% of your portfolio. And with that run up from 200 to 400 at the end of the month, it's going to take and sell a bunch of shares. I think that's the advantage of it for $5 a month, is that you don't have to do the math. Now, in a brokerage account, it's going to keep it at a percentage. The benefit is it's going to keep it as a percentage. So, you say, hey, I want this as 5% of my stock portfolio. It's going to basically do the math for you and trade on fractional shares. I think that has, if you wanted to talk about tax advantage stuff, I think you're better off using it in a I think you're better off, and you can probably for $5 a day, you can say, hey, I don't want this one to be more than 10. You change it that day from 5% to 10%. You want to, increase your percentage in something, and it'll sell and do a bunch that day. So, but I don't know that there's necessarily an advantage or disadvantage. TQQQ is coming back. Woo! I mean, they're doing the math for you. $5 if you don't want to manage your stuff probably makes sense. I think it just really depends on your aptness to want to do math. I think it's less about, oh my God, it's helping me a ton, or tax advantage. I think it's just more about it's saving you time. I think that's what the $5 fee is. Oh, I've got CNBC on behind me. Seven, 10, 23 market update. I don't think it's not worth it. It means saving you time. It's funny you say that, because a lot of the rich folk that I know all say the one thing they regret as they became more wealthy is not spending more money on saving time. I'm going to put the Savvy Trader link. There's no way you can have a tax event of selling a stock and take a gain. I mean, it's not a fund. Funds do it. But funds do it through, they are a, remember, you're investing in a fund. So when Kathy Wood sells, there's an ETF setup that she can say, hey, I'm a fund. I'm distributing the money that is going to get taxed. So I think, Christian, that's where she gets around that type of stuff. I like... I'm I gotta get that link. Copy success. Boom. No. Copy success. And let's see. Let's see if I can actually include all of this. Boom. Oh, God. Okay. I'm going to have to... Okay, I had to remove publish now. Does your episode? No, it doesn't complain. Illicit content. Next, insert ad breaks. Fubo. Sherry's making a boat. Done. Wait, insert ads. Insert ad break. Okay. I thought I did that. Has one ad break. Okay, next. And we've got all the notes below. Publish. Let's see. TQQ is coming back. Wow, Fubo's doing. Jeez, look at Fubo. Sherry's doing well with Fubo. I think it's a good trade. I do think it's a good trade. Oh, I've got to edit. Okay, let's open iMovie. I got to put the video file into iMovie. And I got to move this down. And oh boy. 710. I'm going to put this. There we go. Okay. Boom. We're going to export this oh, let me just do a. I hate that it crops, but let me colorize it. Auto. Boom. Boom. Okay. And we're going to save it. Export file. Next. 710 pod. Brandon, call Fidelity. I don't think you can, but I'd call them. Because, you know, listen, I'm a douche on the internet, Brandon. I don't think there's a way to do it, though, because anytime as an individual you create a tax event like rebalancing, you're selling and buying. So you don't create the tax event when you buy, but you do when you sell. And I can't imagine they figured out a way around that. Unless you create like your own custom ETF. But there's no way they're doing that for $5 a month. Because there's legal issues. Now I got to do I got to get Canva. And we're going to do the green one. Uploads. Send back. I see some of the other notes that I had. 10. And okay, share. Download. Bard is amazing. Brandon, the only thing I will tell you about Bard is try and confirm some of the stuff. Because like for, oh wow, TQQQ took another dump. Some of the percentage gains that it gave me sometimes were a little bit wacky. Like it didn't do math correctly. Those are called hallucinations. And so it was interesting, but let me see how much longer iMovie has. Boy, these fans are 6 minutes. Bard is amazing, though. Let me see. I'll move you back to TrendSpider. Sherry, Fubo's a trade. I wish I would have bought that this morning rather than TQQQ. This is what's crazy is I'm buying TQQQ and the 65-minute algo says get out. But I think around that $40, look. I mean, if you just put a line here at $40, look at that. So June, what, 14th? You could have bought down here at 36. Then you're up at 41. Buy back down at 39. Then you sell at 42. So I'm just kind of making my way down. Mullins up again. Look at Mullen. Let's go to the 5-minute. I don't see Mullen up for. Ooh, it did. It moved up big. It's a 5-minute chart. So this is. There is 9:30. 9:30 at $18.18. And you're up there. So who was it? Somebody asked about Mullen earlier. Michael. Was it Michael? Yeah. Michael Mullen. If you're still listening, Mullen's there. Mullen's running. By the way, TQQ is running. Here's a 5-minute. Let me get out of the strategy tester. Here's TQQQ. If you're playing a 5-minute, you've got confirmation over the 9-day now. Now the 50-day is moving down. Let me get this. Remove all annotations. But you don't care about the history of this one. Look at that gap. That gap on the 5-minute where it just immediately covered it. Cake. Oh, I love cake. You know, I played Ruth Chris. Here, I'll show you. If you look at a long term, we'll go to a weekly of cake. See how well, like, it came off the pandemic? Down here at 17 to 58. Look at the one I played. Oh, where's Ruth? Did Ruth not? What's Ruth? I had them. Why is Ruth? Where is Ruth? Did they get taken over? Oh, Darden bought them. So I can't see the damn stock chart. DRI. They bought Ruth Chris. But I had Ruth for a long time. Look at Ruth Chris. We're going to go small head. This is Darden. You could have got Darden down here, low 26. It's at 165 now. Cake looks good, man. This is a weekly. So you're under the 200 day. Let's go to a 4-hour strategy tester of cake. So you're in at 33.21. You're at 35. You're still kind of just hovering. The 200 days negative, but your 59 and 21 are positive. Might not be a bad turnaround. Their earnings are coming up July 26th. I might add that in my notes for tomorrow. Let's see. Title. Tuesday. Cake by Sherry. Cake by Sherry. And I'm going to do Mullen for Joe. Because I like that one. I shouldn't say I like Mullen. I just like the trade. $22. Got up to 22 cents. So it's still got its confirmation here. Let me move you over. I'm looking here. You're still above that 9-day. You got a red candle. Is that a triple bar? Hold on one second. Let me zoom in here. That's a triple bar. So, right here at I'm on a 5-minute, 9.55. That one closed at 20 cents. The period here, it's baby bars though. That's the problem. Percentage-wise, you're really doing well. But if I had seen that, I would have traded this one and gotten in at 20 cents. And sold at 22. I mean, that's a nice 10% gain. Where's my iMovie? Let me see how much longer I got. Oh. iMovie's done. quit iMovie. We're going to go over here, select files, 710 pod. We're going to upload thumbnail. Do downloads. There it is. Okay, let's see. I don't know if it's going to let me add all of this, but we're just going to do this. Copy, paste, aren't allowed, so I have to find those damn brackets. There it is. Okay, and then we're going to take this and do Mullen at 21. I'll look at C for you in a second, Sherry. Oh, I got a new interaction. Okay, we got the scans. And then I got all that. Your description is too long, which I know it probably is. We're going to use this link. And I'm going to take this out. Going to take that out. And then it looks like everything's good. Playlist, daily. Okay. Done. No, it's not made for kids. Next, next, next. Public. Publish. Okay. Okay, Mark wants me to go over Mark from Spotify. Okay. Let me see, interact. I think that's the only one. Yep. Yep. Okay. Bum, 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 bum. Mullins back down at 20. Let me see. Darden. Okay, I'm going to get out of there. Get out of there. Get out of there. Move you back over. C Limited. I have my Netflix before it freaking flies up. Hold on, let's see. Where's Netflix? 437. Oh, it's crashing. Let me look at the 5-minute on this one. That gap is juicy up there for earnings, but I mean, just here's the thing with Netflix. Yeah, the strategy that TrendSpider has shown here, this one is a great one because it does, even in the short term. Let's move it down to the last year. 382. So this is 18 months. It saves you. It loses you 14% versus losing 28% with just the I guess I can't. Let's see. We're going to go seven. Oh, I keep pressing tab. 2022. Wow. Underperforms over the last year, but that's because the move has been really big. 16% you make in the last year. Here's where the back testing starts. So you make 16%. Over 147% in the actual asset. So you're underperforming because you're getting out during those times when it's going up. It got you out right here, which wound up getting you buy-in at about the same price. But here, let's see if we buy 20 days prior. And let's back test. Let's do 3 years, 2020. 6.5% gain. I'm going to buy it today, definitely. Let me see. I got to keep an eye on that one. Yeah, it doesn't have confirmation on the 5-minute right now, and the VWAP's trending down, so I'll wait for that one. Let's look at your C, Sherry, SE. We'll go to the 4-hour. Boom, boom. Ooh, nice beaten down stock. For me and everybody else who's just not quite sure, I know it's a technology company. Internet retail. Engages digital entertainment, e-commerce, and digital financial services in Southeast Asia, Latin America, the rest of Asia, and internationally. It offers Garena digital entertainment platform for users to access mobile and PC online games as well as esports operations. Company operates Shopee e-commerce platform, a mobile-centric marketplace. Let's see. The market cap is $31 billion. They're losing 900, almost $1 billion a year. They have cash on hand of $11.57. So what's $11.57 times 563 million?
The answer is 6,513,000,000.
Yeah, they got 6 billion of cash on hand, so they're not in danger. Shit, 6 billion of cash on hand. This one, and it's only trading at 56. You did have that double top. I mean, that was clear. But I think it's an Asian stock, so it's getting beaten down. The algorithm over 2 years loses you 65% versus losing 80% on the actual asset. If we look at the weekly, you just started your 200-day, which is still positive. Your 50-day is still negative. I would still be out of this one. And Jerry, the only reason is that move there. I don't see positive. I'd rather miss the first 10% of the move and get back to the 200-day at 138 than to get in at 58 and be down at 25. You know what is I mean, this Amazon here. Amazon's tanking. I don't know why. But you got that leg down to 2%. They're down 2.13% today. It's going to create a small gap there because I can't imagine you're going to be up 2%. I'll go over cake for you tomorrow, not SE. Yeah, I'd be careful. Cake I like, and the reason I like cake is A, I think people are going out to restaurants a lot more now. B, I think it's been beaten down a lot. And I think the valuation actually makes some sense. Their PE is high. I mean, that's high for a restaurant. Let's look at Darden. DRI. See, Darden's even less. And it's been a better performing stock because it's less. So Cake, the PE, I mean, they have to grow. Average price target of 46 and 33, and you're trading at 35. I mean, these guys initiated Wells Fargo at 33. Yeah, they've just got to grow more. I mean, that's the thing is their PE is rather high. 3.15% dividend, though. What does Darden give? 3.21. I'd argue Darden, even though it's up near that 52-week high, Darden's just getting into their PE. If you applied the PE of 30 to Darden, here, let's see. We'll go to DRI. And then we'll go charting. And we'll select a symbol. And we'll say cake. Oh, and you know what else you should put in here? We'll put play. Dave & Buster's. Because I think that's a similar one too. Okay, so 1 year. You're kind of in the same territory between DRI and play. Cake is underperforming. Year to date. Same kind of thing. Play is actually beating them both. 6 month. Cake is down 10%. Wow. 1 month. Cake's PE is just killing them. Let me see what the PE on play is. But it's not like I'm going to Dave & Buster's. Yeah, see, play just has a low PE. And they continue to grow. Average target price on play is $56.50. You're trading at $45. Okay. With that, I am going to watch Netflix, but I am out of here. I want to see where your Mullen is. TQQQ is down at 39.60. 39.50 is probably the play. Let's look at Mullen. Mullen's at 20 cents. Kind of lost its mojo a little, Joe. I'll look at Fubo too. Yeah, it's lost. See how it's under the 9-day now, Joe. So it went for that little run. Fubo's continuing. And Sherry, the more I think about it, do not sign up for TrendSpider on your mobile device. I tried the mobile app last night. It's good enough when you have TrendSpider on your computer, but it's not good enough to justify a subscription for just the mobile device. Good deal, Joe. High five. Fubo's still got confirmation above that 9, even at 14% today. Let's look at a 10-day. Yeah, so here's Fubo. You got the volume to justify it. Oh, here, I got to bring you over. You got the volume to justify it here. See that green line over to the right? I think you can see that green line. Yeah, my head's not in the way. You got it to justify it. I'm losing a ton of money because Apple's down $2. That's what's taking QQQ down today. But I'm not going to obsess over it. 39.50 was my original buy, but I actually put in 39.70 because I didn't buy that many shares that it makes that much of a difference. I wanted to just get it. Meta, it's a $300 stock. I've been saying that since 270. It's at 292. So if we just go today, 5 minutes, not 10, I want 5. Meta. It's not a buy right now. It's on its way down. 255. Let's see. I don't think that's out of the realm of possibility. That's likely. I mean, it's getting a little button hook right now. The VWAP's crossing over on the 21 day. But the 200 days positive, the 50 days positive. Do I have a 50 day on here? No, I don't have a 50 day. I just got the 209 and 21. The MACD's getting a little bit stretched up there. But your RSI right now is at 81. Sellers have to show up. Yeah, you're doing well, Sherry. Make that rent money. Apple's under 190. So Apple's chart just looks ugly today. It actually looks ugly for a 5-day or a 10-day. So looks ugly, but shit, if I take you over to, and we go Apple, it's going to have that button hook. Has it gotten us out yet? I don't think it has on the 4-hour. Nope. We're going to buy Netflix today, though. Okay. I am out. You guys have a great day. See you guys later. I'll send out the newsletter in a little bit.